Hello everyone, I'm Siddhant. Today we will discuss the chapter number 14 of the accounts. This chapter is all about preparation of the final accounts. As we studied in the last chapter, that is in the balance sheet equation, we have seen how the balance sheet year wise differs or maintained. We discussed in the last chapter. Also we discussed the equations so that it could be easy to understand what all the assets and what all the liabilities. So here in this chapter we will start the discussion with a basic understanding which is important. One thing is very important. I want to convey that life is all about to simplify the complexities in your life. So how you simplify the complexity is the main motto of living the life. So we will keep it very simple. This chapter we will understand the topics by understanding the examples, so it would be easily graspable. So we will discuss it. In the last some of the chapters I already had discussed what is balance sheet and what is P&L accounts. I already told you these are the part of the financial statement. One thing is very clear. So why these two things are made, that you must know, then only you can analyze the things. The balance sheet are the balance sheet that the company made shows the balance sheet of any company shows the position of the company, and the profit and loss account specifies or reveals the performance of the company. So what does it mean? The performance of the last year. How you can measure your performance by looking at the last year's result, and your performance is just the last year's result. But the position is till now how you have positioned yourself. That's the position. It covers all right from the starting to till date. The position covers start to till date, and the profit and loss account covers only the performance of the last year. So we will see the format, how the formats are for the balance sheet and the profit and loss account. The balance sheet is like this, that liabilities, and we have to mention all the liabilities here. Assets, we have to mention all the assets here. But in the profit and loss account we have to measure it with the credit and debit, because as we have discussed that for all the accounts we have to maintain ledger. So it's kind of ledger type, but it's not a ledger, it's a finance statement of all the ledgers is the profit and loss account. One major difference we will see how it looks through the example. We will understand both of this by understanding the examples, how the things are categorized in both of them. Now we will understand what is trading account, because in order to make a profit and loss account, first we have to make a trading account. What is trading account? The trading, as the name suggests, trading means buying or selling. Buying of what? Think yourself as a company. What will you buy? You will buy the raw materials, you will buy the machineries. We will not take machineries, because as I told you, profit and loss account covers only the last year performance, means whatever the last year's okay, I will tell you one thing. There is a thing called, the assets are of two types: the current assets and simple non-current assets. The current assets are those assets which is for maximum of 1 year, and if it is maximum of greater than 1 year, then it can be called as non-current assets. Example of current: whatever loan you have given for maximum of 1 year is your current assets, and whatever the loan you have given for long terms that is greater than 1 year is the non-current assets. So the trading account, whatever it mention, it will only mention the current assets or the current liabilities. Similarly, the liabilities are of two types, current and the non-current. The similar thing is, so in the trading account we will take the current, only the current assets and the liabilities are taken into account. So what all the current assets and the liabilities we are taken into concern? For example, for particular year we have made the sales of, since in the trading account this side is always credit, this side is always debit. So in the trading account, whatever we say we made the sales is in the credit side. So by sales 2 lakh of rupees, and in the debit side, what all things we have purchased. Let's say we purchased the raw material worth rupees 1 lakh of rupees. To purchase 1 lakh. Okay, this is how the trading account is. Now after the trading account is made, we will see with the examples, we will understand everything. I am just giving you the basics so that you can catch up the examples. And after the trading account, the profit and loss account are made. How this profit and loss account made? Since here the name is trading, so all thing related to the trading. What is trading? The buying and selling of the goods is nothing but a trading. But here in the profit and loss account, we will take all the accounts into concerns for the last particular 1 year. Let's say here we took only the purchase and the sales maximum, but here we will take the office expenses in the debit side. Let's say salary we will take into concern. So whatever the nominal account you had in the you made in the ledger, we already have discussed the ledger. We in the ledger side, in the ledger, what all the nominal accounts mentioned in the ledger is directly we have to write it in the profit and loss accounts. So this is the gist of the difference between the trading and the profit and loss account. So one formula for any trading account, there is a formula called a gross profit or gross loss. As I told you, what is the gross profit and what is the gross loss. From every trading account we used to find gross profit or gross loss, but in the profit and loss account we used to find net profit or net loss. Why the net? Because we are taking everything into concern when we are making the profit and loss accounts. That's why. So what is the formula of the gross profit? For example, take yourself as a company. When you will be in profit, if you make the sales more than the purchase, then you will be in profit. So gross profit is nothing but a sales minus purchase. It is, I am taking it simple, but you have to write like this, like net sales minus, and this purchase is nothing but a cost of goods sold. We will take a new page. Let's say gross profit is equal to net sales minus cost of goods sold. Now we will see why this formula is. As you know that when the profit is that is sales minus the basic formula of the profit, sales minus sales price or minus cost price, or you can say sales minus purchases. So why this formula? This formula is just because net sales means whatever sales you made and whatever the return sales you done. Let's say you sold the good for 10,000 rupees, but 1,000 of goods got damaged in transit, so they will return. So this net sales is all about the sales minus returned sales. Okay, this net sales stands for. And what is the cost of goods sold? As I told you, purchase what? The raw materials. So purchase what? Purchase of the raw material is the cost of goods sold, but other things are also taken into concern. So minus this cost of goods sold is the cost of raw materials plus the electricity spent in the production of the goods, or the wages or the salaries, everything are taken into concern, and this consists, and this overall things will be called as cost of goods sold. That's why this formula is like this. This is a very useful formula, and you will be the questions will be asked on this, so that's why I cleared the concept. Now we will see one important concept: what are opening stock, what are closing stock. Okay, let's say in 1st April 2019, let's say you have a company and you purchased 1 lakh of rupees of raw material, and you think that this raw material will be utilized throughout the year. So it is the raw material you purchased for the utilization, but when you come to 31st March 2020, only 90,000 of the raw materials used. So how much you are left with? You are left with 10,000 of the raw materials. So for this year, when you prepare the balance sheet or the profit and loss account or anything, so in the balance sheet, as I told you, the assets and the liabilities are mentioned, and since this raw material is the is nothing but an asset, so in the asset side you have to write this so in the asset side you will write as stocks, and when you prepare the next year's balance sheet, let's say till 2021, when you are preparing the next year balance sheet, then you have to mention this, that this 10,000 of the stocks which was left will start as a opening stock for the year 2020. Because why we are writing this? Because this is the left raw materials which was not utilized in the 1920, so this 10,000 will be utilized in the next year, so we have to write this as a opening stock 10,000 of rupees. We have to take this into an account. That's why the opening stock. Similarly, when we are making for any financial year we are making, and let's say this opening stock will be mentioned in the balance sheet of 2020-2021, but since this is mentioned, so this also have to be written in the when we are making the balance sheet of 1920, so this will appear as a closing stock. Okay, that I wanted to say, that opening stock is nothing but the stock that we are left in the last year will be put forwarded, will be taken into account for the next year balance sheet or the profit and loss account is the opening stock, and the closing stock is the raw material we are left with after the 1 year. And when we are making the financial statement, then we have to mention is that this 10,000 rupees is the left part that we are left with in this year is 10,000, and when we started the next year, since this 10,000 will be utilized in the next year, so we have to write this as an opening stock, and here in the last year we have to write it as a closing stock. I think it will be clear to you. Now we will see example, so that every concept what we have learned will be easily understandable. So this is the example. Let's say in this 30, let's say you have a company for so many of years. So till now, when you are making the balance sheet for the year 18-19, for the financial year 18-19, so on 31st March 2019, you will present the position of your company. How can you show the position of your company? Through the balance sheet. And how can you show the performance of the company? Through the profit and loss account. So you have made balance sheet of your company's account. Here you will mention everything whatever required in the balance sheet. Let's say example, here we have shown capital 50,000. This is the amount you injected. See, in this example we will discuss all the concepts that we had learned in the module B of the accounting, so it will be a revision throughout. Now capital is 50,000. This is a long-term liabilities. What are long-term liabilities? Everything which is more than of 1 year is the long-term liabilities. Let's say 20,000 of rupees of the loan for the 5 years you have taken to in order to utilize in your company is the long-term liabilities. And what are short-term liabilities? Short-term liabilities are, for example, let's say you have taken the money by issuing the treasury bills or any short-term bonds. So this is the amount. Or you have taken the raw material on credit basis. So these short-term liabilities are nothing but this is. And here in the asset side you had a fixed assets of rupees 50,000 worth. This fixed assets includes everything like the land, buildings, machineries, everything. So and the cash you had in your hand is 15,000. And stock, which stock is this? This is the left stock you had, as we discussed here, that in any year we are left with some of the stocks. So these stocks are like that. These stocks got left non-utilized stock. Whatever you had purchased in the 18-19, this is the non-utilized stock. So you have to mention in the balance sheet that this much amount of stock you are left with. Receivables. What are receivables? Receivables are means that you will receive this amount in future. It can be anything. Let's say you have sold your goods on credit basis. So you have given someone's your product, but you will receive the payment after 1 or 2 months. So this will includes in the receivables. So the balance sheet position at 13/3/2019 is this two balanced. That's why the balance the name is. Now we will see that in the 1920. How this 1920? After 1st April 2019 to 31st March 2020. So whatever operation you will do in this point of time will be mentioned. Everything, every transaction you did, or everything you purchased or sales or buy or issue shares, everything you do, it will be mentioned. It will be reflected in this year's balance sheet, which will be made at the last of the year. So we will, with this example, we will lastly make the balance sheet of the 1920. At last we will make the balance sheet and the P&L account through the example of this, so that it can be easily understandable. So what all operations you are going to do here, we will mention that. Let's say you sold the goods worth rupees of 2 lakh. You purchase of the raw materials or any goods is 1.70 lakh. Expenses. What are expenses? As I told you, expenses are the nominal accounts, and expenses means whatever expenditure accrued on your company is the expenditure. Like let's say the salary, the wages, or the buying of the printers, buying of the pages which will utilize in the company is the expenses. 20,000. Now see, closing stocks. What are closing stocks? this 10,000 closing stock is for 1920, but when you will be asked about what is the 1819 closing stock, so this 9,000 is the 1819 closing stocks, and same closing stocks for the 1819 will become the opening stock for the 1920. So for the 1920, what will be the opening stock? 9,000 is the opening stock for the 1920, but the closing stock is 10,000. So it means that on the date 31/01/01, okay, 31/03/2020, this much amount of stock you are left with, which will be utilized in the 2021 financial year 2021. So this means that now you bought some fixed assets, it's a purchase, so it's worth of 10,000. Repayment of long-term loans is 5,000. Repayment of short-term loan is rupees 2,000. Increase in the receivables is rupees 2,000. Okay, these all operations are done throughout the year. Now you will have to make the profit and loss accounts for the year 1920 and the balance sheet for the year 1920. So how can we make the first? We will make the profit and loss account, because the profit and loss account specifies about the performance for the year 1920. So every company, whatever, when they make the financial statement, they used to make the profit and loss account first, because it will ascertain that whether they are in profit or not. So we will make the profit and loss account for your company. As I told you, this profit and loss account, this one is in the debit, this one is the credit. Now when we are making the profit and loss account, we know that whatever the sales, since profit and loss account are made from the trading account, so whatever mentioned in the trade account will be in the profit and loss account as well, plus everything extra we did, like the expenses, salary, wages, will also be included. So here sales, so we will write by sales 2 lakh of rupees. And next, since here the closing stock is 10,000, which will utilize in the next year, so here we saw that in the assets side 9,000 of rupees is included. So here by closing stock, since this is the left amount, which is nothing but our asset, and it will be utilized in the next year, so it will be in the credit balance. By closing stocks 10,000 of rupees. As we wrote the closing stocks, we wrote in the credit balance. Why? This closing stock is nothing but a real account. So in the real account, when we see the methodology or the trick we learned or we mug up to ascertain whether the account is credit or debit in the journal entry, so we will see that closing stock we wrote in the credit. Why credit? Because this closing stock is nothing but a real account, and we need to what comes in, since this stock is with us, so it came from somewhere in past, so it will be in the credit. That's why we wrote in the credit account. Now other thing, that since we had stocks 9,000 of rupees, and here in the debit side to opening stock, how much? 9,000. So how this 9,000 comes? Because this is the left portion which will be utilized in the profit and loss account of the 1920. So we have to start with this. That's why it's in the debit, because this let this first this will be utilized. This inventory of 9,000 which were left in the last year, it will be utilized first. Then let's say we utilized for some 2 months, we utilized this 9,000 worth of rupees goods as a raw material. Now we are exhausted with our raw material. Now we will buy again 1 lakh of raw material. Let's say in January, February, March, let's say in April, we bought 1 lakh of raw material again. Now since 1 lakh we bought, now we utilize for the other 10 months. Let's say here in the March we are left with, let's say, 10,000. So this 10,000 nothing but a closing stock, and this which is started with, it will be utilized since these are left. So you can also link it like that. Since it's on 10,000 will be left, so it's our asset, so it will be in the credit side. And since we are utilizing first the 9,000, so it will be in the debit side of the profit and loss account. Opening stock will be in the debit side and closing stock will be in the credit side. That's it. Now other 2 purchases. Since we purchased the raw materials of 1.70 lakh, so it is in the debit side. 2 expenses, we have to write this 20,000 of rupees. Next the net. So this is our profit and loss account. So when you count this, how much? 2.10 lakh, and when you count this 1.99 lakh. So what does it mean? It means that these are the since we are dealing with the profit and loss account, so these are the income and the expenses. Whatever the income and the expenses done in the year is shown here. So since this is in the credit, so 2.10 lakh of rupees came to our company, but we spent only 1.99 lakh of rupees. So what's the difference? 11,000 of difference is nothing but your profit. Why profit? Because you are credited more than debit. That's why you are in the profit and loss account by saying that. But since we know that for every account everything is balanced, so we have to write that here net profit 11,000 of rupees. So now we can write 2.10 lakh. So this will be in the these 2 are balanced. So here the profit is 11,000 of rupees. For example, if some years to any company, like in our bank, Punjab National Bank, by seeing this profit and loss account, the PNB can say that yes, we are in loss, yes, we are in profit, by seeing the profit and loss account. In the profit and loss account, since when there is a debit balance, since here it is lessen, so extra amount is added, so we can say that when there is a debit balance, the company is in profit. But when there is a credit balance, we can say that we are in loss. In other words, when the credit is more into the company, we are in profit, and when the debit is more into the company, we are in loss. It's simple. I already told you why the debit balance is called. Whenever there is a mismatch, when there is a the one which has more value, let's say here we had 2.10 but here 1.99, so we will say that the account is in debit balance, because we have to add something to make it compensate with or match with the values of this side. So we have to say that this is in the debit balance. That's why I called that debit balance. You can also simply call the credit or the debit side. The credit is more, the debit is less. That's why the profit. Simple. Now we are done with the profit and loss accounts. Now we will see, we will make the balance sheet of the particular year. The balance sheet of the 2019 to the 2020. So how our balance sheet affected, we will see. Here balance sheet liability, assets. Now capital, here the capital is, since the capital remains the same, since our company is in profit, so we have incomed more than expenses, so we haven't touched our capital at all, it will remain the same, 50k. Now just by seeing the example, just tell me, is there any reserves we had? Yes, pretty much, because the profit, whatever the profit we are in, it will be go into the reserves. So 11,000 will be in reserves. Next, the long-term liabilities, how this affected. One more very good conclusion you can make here, that the profit and loss account includes only the year-to-year changes in the companies or the income or the expenses in simple meaning. Here we are also provided with the data like repayment of the long-term loan, repayment of the short-term loans. It will not be reflected in the profit and loss account, because profit and loss account only measures the income or the expenses overall, but balance sheet covers everything. So here we will mention in the balance sheet this changes. Here the long-term liability we had 20,000, but here repayment of the long-term liability of 5,000 is made. So net is 20 minus 5 is equal to 15. Okay, now the short-term liabilities, how this affected. Now this is 10,000 of rupees, and here the repayment of the short-term liabilities is 2,000. So 10 minus 2 is equal to 18. So no, 10 minus 2 is 8. Now we will see the asset side. What all the fixed assets we had the same fixed assets. No, we will see the statement that yes, purchased fixed assets of 10,000 rupees. So we had 50,000 plus 10,000 in this year. So here this is the position of our fixed asset in this 1920 year. Now the cash, what is the cash we are left with? Since no mention of the cash at all, so we are now for cash we need to see our ledger. As I told you, balance sheet is made with the help of ledger, so we will see the cash account. The cash account, the debit, credit. As I told you, in the last year we are left with 50,000 rupees. So since it's in the asset side and it will be utilized in the next year, so whenever there is a closing stock, let's one thing make very clear, whatever the closing stock or closing cash, whatever we are left in the particular year, it will be in the credit side. And when we make the for the next year the balance sheet or the profit and loss account, and when we, let's say I will make it very simple. Let's say the closing stock or the closing cash will be in the credit side of any ledger. Okay, but when we are moving from one year to another year, we have to make this closing cash or the closing stock, we have to write for the next year in the ledger, we have to write it in the debit side. So we have to change it to the credit to the debit side, and we have to write that by opening. Here we have to write by closing cash, by the closing stock, and in the balance sheet directly it will be written. But when we make the ledger for the next year, we have to write that by opening cash or by opening stock. This is a very simple, it will not change, you have to keep it in mind. So we, in the last year, whatever cash we had, we at the last time the cash the company had is 15,000. So by opening cash we have to write 15,000. And what all sales we did, we will see what all sales we made. Now we will make the cash account like this. Here I am making cash account just to have the revision of the last we did, how the ledger account affected, how the ledger and balance sheet are related. We will see. Here we need to find the cash. So in order to find the cash, we need to see the ledger. So we are making the ledger of the cash account. Here the cash account, by opening cash we have to write this 50,000, and by sales as I told you, since we are dealing with the cash account, which is nothing but a ledger, so we will discuss, we will understand by seeing the methodology we followed right from the chapters when we started the accounting chapters. So for any account, since cash is a real account, so we will see the real account, credit. Okay, here we have to write debit what comes in, credit what goes out. So since we are making the sales, so what does it mean? Cash will come in, and when the cash will come in, we have to write it in the debit. So by sales 2 lakh of rupees, because here in the total sales we did 2 lakh of rupees, but we have to write the net sales, since we sold the goods worth rupees 2 lakh, but still 2000 of rupees yet to receive, it haven't come to us, so we have to subtract this 2000 of rupees. So what is the net? 198,000. Simple. So and also we have to write the whatever we in the cash account. Let's say what we need to write is, okay, we bought fixed assets. So since we bought fixed assets, so the cash will go out, then only the fixed assets will come, because we have to spend, then only fixed assets can be purchased. So what goes out is in the credit. So we have to write to purchase account, how much amount to purchase fixed assets? 10,000. I hope you are understanding how we are using the ledgers methodology to create the ledger account, the cash account. Why we are understanding the cash account? Because here we need to find the cash in the balance sheet. So in order to find the cash, how the balance sheet is made? Balance sheet is made through the ledger itself. That's why we are doing to make you understand quite easily. Next, again, purchase of anything like the goods, raw materials. So to purchase 1.70,000. Now since we are repaying the long-term loans, so cash is going out. So whatever, when the cash going out in order to pay the long-term liabilities is the whatever in the real account, the cash is going out, it means it's in the credit. So we will write in the credit side. How? By, okay, I wrote 2 here, we have to write by everywhere, and here 2 in the debit side, it's 2, and in the credit side we have to write by. So by long term liabilities 5,000. Similarly, by short term liabilities 2,000. By expenses are nothing but a going out of the cash. So going out of the cash is in the credit side. What expenses we did? We expenses, yes, 2,000 of rupees. Sorry, 20,000. 20,000 we did. Okay, then by, so when you try to balance it, it will be 213,000, and this one is 207,000. So this got mismatched, but in every ledger, every trial balance, every balance sheet, everything is balanced. So in order to balance, we have to add this 6,000 of rupees here. And what is this 6,000 called? It will be called as a credit balance, because we are writing it in the credit side, so it will be called a credit balance. One thing. Another thing, we have to write that by closing balance carried over. Okay, so this extra cash is nothing but the closing cash for the 1920, and this the same cash will become the opening cash for the 2021. I hope it will be clear to you. So this 6,000 we have to write this here. I think everything is crystal clear to you because I have taken every aspects in order to make the balance sheet so that everything will be revised or everything will be cleared. It is a revision of all the chapters we read in the last or the previous 1 week. It is a revision of that. We have applied everything, so it will be cleared. And when you started solving questions related to this, it will become more and more clear once you dwell into, and whatever the doubt you had, you can ask me anytime. So we have found the 6,000 of cash here. Now what all stocks we had, since it's the closing stocks, directly wrote 10,000 of rupees, and receivables, it is saying increase in the receivables of rupees 2,000. So we already had receivables of 6,000 and 2,000 more added, so 8,000. Now when you balance this two sides, you will become 84,000. It will become 84,000. So here you started the balance sheet with the assets and the liabilities 80,000. Here also, here you had 84,000. It means that your business grown. Also in the profit and loss, we found we are in profit. So it simply means that we grown out from the next year. So I think that's clear. If you are not clear, then again watch the video so that it will be clear to you. That's it from it. Practice as much as questions you can so that it will be more clear to you. Okay, thank you.